Welcome back, everyone. I've seen a number of people wondering recently, or getting excited, or thinking about why have commodities been doing so well recently. And so today I figured I would give a needlessly complicated answer and look at, is this the beginning of a new cycle or super cycle? We'll see. I have some thoughts on that. So, of course, everything in today's video is my opinion. But since this video is a bit technical and the parts do a little bit build on each other, I figured I would put this index here in case there was one of these things that you were interested in later, but we're going to skip the earlier ones. Or we're going to get bored and leave before you got to the point. So here are the 5 things I'm going to talk about, and now I'll get to talking. So the first part is very simple. When the dollar goes down, as it has been recently, everything priced in dollars goes up, and that includes commodities. But the trick here is it's actually doubly relevant for the commodity world and for the emerging markets that often are commodity producers as well as consumers, in that the debt, the US dollar debt that's all around the world, is what funds a lot of these things. So when the US dollar goes down, in addition to the commodity producers being able to sell commodities at higher prices because the dollar went down, they also have the US dollar debt that is less of a burden squared, if you will, because they're making more money and they have to pay back less kind of at the same time. So this is why when you look around the world, when you look at history, commodities booms can also coincide with periods of the dollar falling. They are often inflation at the same time, but the point is when all people all around the world are getting more US dollars, it greases the wheels, if you will. And so this is why EM boom, US dollar down, they're all kind of correlated. And if you look at history, these things kind of feed on themselves. Now, there is a bit of a chicken and the egg. And what came first? Commodity boom, dollar down, EM boom. But they do tend to feed on themselves. So if it does kind of get rolling, there's a lot of A leads to B, leads to C, leads to A type thing going on. So the second thing is recently we have transitioned from a period of great stress in the global economy to, well, not. And the big thing here is going from a state of contraction to a state of growth is a big shift when it comes to demand and, more importantly, future outlook for demand. Because at times of stress, things shut down, spending falls, it's deflation. People don't want to spend more money. The problem is the miners are often stuck producing for their lives. So they have to produce and they eventually drive down the price rather than sell nothing. So eventually either demand or supply comes off or demand recovers or both. But as the markets recover, they start looking at the new reality, the next cycle, if you will. How much will there need in 2 years, 3 years, 4 years, so on. So when you're going from extreme deflation to bounce back into growth, the market needs to take a look, price in the future, and this could be a big swing. And as long as things keep getting better and better at a better pace, this type of move can continue. Now, I do want to throw a bit of caution there because I did just say getting better and better at a better pace. That's different from just growing. Now, in this chart, if you will, you can see different paces of growth. Some are compounded, some are slower, some are whatever. But the point is, when you look at the different paces of growth, if we go from expecting a higher pace of growth, so look at the top line here, let's compound growth, and then all of a sudden the growth slows to the second or third line, which is still growth, but just less exciting. Well, all of the white space under the top line, that would be capacity that the market's thinking it will need, then decides maybe not. And so that's still not, may not be good enough, basically, to support the continued acceleration. So even if the market's growing, it's not always good enough. Next thing is leverage. So we just went through what will push the price of things up, as well as what will change the markets looking at the future. So why do miners, commodity companies, have amplified responses to this? Well, it's because of leverage. Now, leverage cuts both ways, very important to know, because it will just as often destroy an investment as multiply it. But with commodities, commodity companies, they have all sorts of leverage. So in addition to having the financial leverage, debt, often, they will also have, discounted share price because it's a risky business. They might have, and then after all that, after the cost of capital, risky business type of discount, you also have the fact that they don't make the commodities for free. If they did, commodity prices would be really low, but they don't. So, let's say the commodity X is $50 and a company costs them $50 to make it. Well, then they make $0. But at 51, $1 higher, so 2% higher, they make $1. But if the commodity price moves 20% up from like 50 to 60, there's a 10x in their earnings. So this means that smaller moves in the commodity price can mean a big change in the company's earning potential. And so this is a big factor in terms of why. So companies can easily go from losing some money to making a fortune in a very quick time back to losing money, because let's face it, we always end up there. So this one's a bit complicated. In general, there has been a period of underinvestment in commodities. That's not to say that it's been a 10-year bear market. I would disagree with that. I don't think it's been a 10-year bear market in commodities, not even a 9. Really, even if you were to generalize and use the terms bull and bear, I would say 5-year bear, 2-year bull, 2-year bear. And there's a number of reasons for that, but that's not the place to get into them. But in general, commodity miners often make money there are a few that actually make money by mining, but most of them, if they're going to make money, it's because they sink capital into a project and then inflation inflates away the capital and makes it more expensive for the next guy to get in. That's really how they make money, most of them. Still, we've had an extended period of without a sustained bull market. And realistically, commodities don't go from exploration to production in a week. It can take 5, 7, 10 years to find a project and develop it into a mine. And we haven't had that sustained bull market in a while, in most commodities at least. So this means that there's been a period where many commodities have not gotten the sustained attention, investment that they need to keep producing into the future. So this means that when you go from a period of deflation like we had to a period of, there's growth, there isn't like all that supply that could be like, let's go. It's more so the market becomes tighter, more concerned with, okay, are we going to get that future production? What price do we need to get that? And we better not run out, because there's not really a backlog of near-ready production. So this means that when there's a recovery, things can snap back more quickly. And I think that part of what we're seeing is that type of thing in terms of there's a lot of commodities out there that have a longer term compelling case. And when you're starting to look at pricing and future growth, it becomes much more supportive to the price very quickly. So welcome to the 80% of you that skipped the first four slides and popped in here. Is this the beginning of a new commodity super cycle? It's too soon to say for a number of reasons, many of which I will get into here. Because people often say last time the cycle was X years long, prices rose by X percent, X bagger, whatever. And that's fine, and that's one way of looking at it. But the problem is that wasn't, well, that was last time, and history doesn't repeat, it rhymes. As it's not my saying, it's a great one though. Because last time we had an inflation problem. There was above trend inflation. Haven't had that recently. Does it return? Probably at some point. Is it now? Maybe, maybe not. So last time there was an inflation problem. Last time, and this is the biggest thing that I feel like a lot of people ignore, that it hasn't really been going that way since. Last time, China was growing, and the world really, faster, and then the next year, faster, and then the next year, faster. And the pace of growth was accelerating year after year after year. And realistically, it hasn't been doing that since. For most of the world, it's been a period of slow and anemic growth. And one of the reasons for that is point number 3. Last time, the US dollar went from 115 to 72. That's a big fall. It was really helpful for a lot of emerging markets. Since then, however, the US dollar went back up to, I think it touched 100 in earlier this year. And so my point here being, if you think we're going back to 60 on the Dixie, then commodities are probably a good place to go. So, but if not, if we continue, and if there's a little bit of growth and then slow down, then it isn't. Then it's way too soon to call it a super cycle. But if the world starts accelerating as the dollar falls, if inflation returns, it doesn't have to be 4 years of faster and faster and faster. It could be 2-3 years. It could be dollar falls a lot. And remember, if the dollar falls, that helps emerging markets. And if the dollar keeps falling, then it helps emerging markets grow faster and faster and faster because they don't have a dollar problem to deal with. And dollar falling means inflation. So, is this a new super cycle? No idea. It's way too soon to call it a super cycle. But there's a lot of things that kind of go hand in hand that may start happening. And if they do, commodities should have a extended period of outperforming. So I really do want to stress, way too soon to be saying super cycle, because I think that there's still, maybe this is just recency bias, but I think the odds are it isn't. Could be a good cycle. Is it a super cycle? Odds are no, but maybe. Because realistically, I talked about last time. That wasn't last time. Last time was 2016 to 2018. That was a cycle. That was an up cycle. And then we had 2018 through 2019. It was going to be a short down cycle, I think, on a number of things. And then it was obviously disrupted and became a 2-year down cycle. Now, does that give it more spring? Sure, probably. But I still think that predicting beyond a few quarters is pointless at this point. And I think there's going to be a nice quarter or two. Maybe we'll see how things start going after that. But the point is, can't predict can't predict a super cycle at this point. You can't say it's going to go to the moon yet. I mean, it may, but really it's, I think, far more helpful to take things month by month, day by day, really, but things don't move that quickly. But take things slowly, keep an open mind, keep, thinking, what are the odds things get better? How would they get better? What would that mean for the investments? Because there's some investments out there that are pricing in great things. Other things are saying, oh, this is not going to last. This is not going to last. And we don't know. And so we'll have to see. We'll have to weigh day by day or week by week or whatever. Weigh the risk, weigh the reward, and you're not going to win everything. You can win some things, and some things you can win big. But that's it. Is it a super cycle? Maybe, maybe not. That's all for today. Thanks for watching, everyone. Till next time, have a great day.